Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of energy futures. I'll start with ICE Brent crude oil futures. An immediate countering bullish piercing line pattern yesterday, coming as it did after day 2 in a 2-day bearish separating lines pattern. Thus, this bearish continuation pattern had a limited follow-on lower, opening as it did below the rising short-medium moving average, currently at 80.62, the partner to the rising middle time that's overhead, currently at 80.67, or was overhead, of the March to August bullish Andrews pitchfork, and then dipping back a bit before pushing up through this middle time, as well as the congestion at 80.86 and closing over both. Prices stopped short of testing the overhead significant 61.8% Fibonacci line of the 2014-2016 move at 81.86. Okay, so up until yesterday, the overall actions since early October showed significant elements of a topping type action, mainly a possible small head and shoulders top pattern, with a recent break below the neckline currently at 80.76. Now, one day does not stop such an idea, but it is obvious now that the bullish looking participants, shall we say, out there have noticed what was being built, and yesterday was the first counter to it. It does not mean that such a bearish pattern is over. No. It just means it might take a bit longer, if that is the way the market chooses to move. Now, so far today, a lower open and a spike higher up through the 61.8% Fibonacci line at 81.86. However, the altitude was not conducive and prices have dropped since, such that we are now back below the short-medium moving average and potentially threatening yesterday's low, and maybe then even making a key reversal day. ICE Gasoil futures. An interesting, if lower, bullish white soldier yesterday, which was, for the life of me, just looks like a reactionary action, but with no teeth. It was the lowest open since early October, and the market managed to pierce the significant 680 even support area before turning back up again. Now, yet whilst the rise pierced the overhead short-medium moving average, currently at 689 3/4, it still failed to close over it. Hence the lack of teeth in my earlier statements. This all adds to some of the recent indecision we've started to see. Now, overall, we are still in between the upper time, currently at 730 1/4, and the middle time, currently at 669 1/4 of the rising, if broken, March to August bullish Andrews pitchfork, though we have come awfully close to testing that middle time. Below, we have the September 2019 high at 673 3/4, and the important 50% absolute Fibonacci line at 669 3/4. One other feature which has developed. Recently, I had spoken about the action over October and November starting to look like a possible double top, even Adam type. Well, after looking at Brent, I'm now minded to also look at the action as a possible high sloping up and right head and shoulders top pattern. The market is now well below any neckline, currently at 704 3/4, though there has been a limited exploitation lower of such a pattern. Now, so far today, a higher opening over the short-medium moving average and a stretch up towards the neckline, but not making it. Instead, we've seen a rapid drop down through the September 2019 high and halting at the combination of the 50% absolute Fibonacci line and the middle time. This action has already set us up for a very interesting pattern. You see, we are already set to possibly make a key reversal today. If we close tonight over 690 1/2 or under 686 3/4, then we're beyond. Right now we're looking at a possible key reversal down. It is still fairly early as yet. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.